Today, we're going to be talking about what are audits, why we have them, and what do they measure. When we think about the finances of our district, over the past couple months, there's been a lot of discussion around audits and what do they do and why we might potentially want to have another audit by an independent auditor to come in and look at some very specific areas of our finances. So before we get too far into that, let's really just look at generally what is an audit. And these happen all the time, no matter what industry you're in. If you're in public or private, whether you're in the corporate world or whether you're in small business, audits happen pretty regularly. One of the biggest audits you hear about is an IRS audit. So IRS comes in and audits you, right? You did the best you could on your taxes, but they're going to come take a look at it. So definition of an audit, you can see right here: formal examination of an organization's or individual's accounts and financial situation. It's a final report of an audit, or the methodical examination review. So like an energy audit of a house. Let's see how much you're paying out, see if you could be more efficient. Why have an audit? Well, it's going to provide the stakeholders with peace of mind, as it says right here. The numbers are accurate, knowing that your processes are in place, your policies are being followed, knowing that you're limiting your risk, making sure that your quality control is there. That allows you to sleep at night when you're in charge of a certain organization. And the scope of the audit, they all have a scope. So what are they actually going to be looking at? What are the range of activities? What's the period of time that we're looking at? And we'll talk about that as we go through these different slides. As the annual audit that we have has a very specific scope and is not all encompassing as some would believe. So here are just some types of audits, and I'm not going to read these all to you, but we have external audits. Where an external, obviously, entity comes in and looks at a professional to really look at what's happening within the company. You have a value for money audit. One of these is when you look at your processes, or when you think about automation and really you audit, how much does it cost you to make a product? How much does it cost you to do a process? Is there a better way, a more efficient way, a better quality way? Something to limit risk a little bit more could be done that way. Internal audit, it's a more encompassing audit done by the members of the organization themselves, self-identify different issues that might be out there, test out the process they have in place. For instance, with us, with the warrants, right? So internally, a member of the finance committee might be paying attention and walking through the warrants and seeing what the error rate is. How many times do we have a missing signature, a missing purchase order, or what have you, or unapproved expenditures that are going out of the building. So that'd be internal, and then they report back to the organization. And then after that, you can decide if you want to have somebody else come in and look. Forensic audit, pretty simple, going in, kind of looking at very specific areas that you can see here. A public sector audit, once again, has a very specific reasonings for a public sector audit and a group that would be audited in this manner. You have tax audits, and once again, this is not all-encompassing. I don't know how many types of different audits there are. It's not all-encompassing, but this is just to show you the different types of audits. The tax audit, are your filings correct? Whether as a company, as an individual, and you think about the IRS. Information and system audits, how secure are your systems? How easy would they be to hack? What type of information is there? How much efficiency you're gaining? Are you using them to the maximum ability that you can? And what's the integrity of your system that you have there? Environmental and social audits, one of the ones that popped out when I was looking at this one was, you think about some of the auto companies that have gotten a little bit of trouble because their emissions testing might not have been quite what they said it was. So the results that they had reported when an independent person came in and audited those results, did some testing, found that they might not be 100% accurate, and then you find fines there. Compliance audit. In many countries, you think about companies require compliance audits. So when you think about how compliant are you to policies, regulations, laws, et cetera, and have someone come in and take a look at that as well. So as we look at the annual audit that we have, and once again, as we talked before, no issues at all with our accountant or who does the auditing. They've always been very straightforward, transparent, open, and honest. Done the job that they're hired to do. And as you can see right here, when you look at the letters that come out, they're hired for a very specific purpose to do a very specific audit. Now, when you look at it, one of the neat things that will come out is when you look at what they're really looking at. So when it talks about deficiency of internal controls, it talks about what that is when you look at right here in the middle. And then when you think about the control for this one, it was very limited, right? So if you think about what they were doing, consideration of internal controls for a limited purpose, described in the first paragraph, was not designed to identify all deficiencies in internal control that might be material weakness. Given the limitations during the audit, we did not identify deficiency in internal control. However, material weaknesses may exist that have not been identified. Once again, over here, you see our consideration of the internal control was for a limited purpose, described in the first paragraph, was not designed to identify all deficiencies in internal control that might be material weaknesses. Think about the last video or a couple of the BZ videos. When you think about the finance video, you see some opportunities in there from that are kind of glaring. Well, this audit wasn't really looking for those. And when you look up here, Internal control of financial and reporting on the basis of designing audit procedures, appropriate circumstances for the purpose of expressing opinions on the financial statements, but not for the purpose of expressing an opinion on the effectiveness of RSU 22's internal control. Accordingly, we do not express an opinion. So as the public has brought up more and more questions regarding internal controls around our finances, when it said that, oh, we're audited each year, yes, we are, but that's not what's being looked at by the auditor. So when you look down here, you're going to have a couple more opinions that are shared here when it talks about the auditing standards that are utilized when they talk with the management. And it says right here, once again, you'll see, we do not express, we do not express an opinion or provide any assurance on the information because the limited procedures do not provide us with sufficient evidence to express an opinion or provide any assurances. But for what they had, it looks pretty good. When it says down, when you go over to some of the other information that's in here, they give it very similar right here. Opinion. Accordingly, we express no such opinion. An audit also includes evaluating the appropriateness of accounting policies using reasonable specific accounting estimates by management, as well as evaluating overall information of financial statements. So in preparing, they were trying to get a real good idea on the financial statements themselves, and they were designed for that specific purpose, but not for the purpose of expressing opinion on overall performance or compliance or internal controls. When you look here, internal control over finance reporting, and it talks about what a deficiency is, which you see in the paragraph down here. When they're planning the audit, this paragraph right here, it talks about consider the regional school unit 22's internal control of financial internal and term of the audit procedures. That's what they used. And it's for the purpose of expressing the opinions of financial statements, but not for the purpose of expressing an opinion of the effectiveness of Regional 22's internal controls. Accordingly, we do not express an opinion of effectiveness. Once again, they're being straightforward. It's not part of the audit. Once again, over here, accordingly, we do not express an opinion on the effectiveness of the Regional School Units 22 control over compliance. Consideration down here, when it talks about our consideration internal control over compliance was a limited purpose. And you'll see they say once again, they did not identify any material weaknesses, but there may be material weaknesses present. As we continue to move on, and I'm showing you these just to show that when you think about the opinions that have been expressed, really good accounting firm here, but they also are letting us know they have not expressed an opinion on our internal controls. So when we ask questions about internal controls, about the warrants, about the payroll, which we're going to talk about in a little bit, when we talk about gate receipts, when we talk about some of these processes, that's not exactly what they're doing. So they're here for a very specific reason. Once again, however, providing opinion of compliance of those provisions was an audit objective. Here was not an objective of our audit. And accordingly, we do not express such an opinion. Right? They're not going to express an opinion on something that they did not actually look at and audit. Right here, we believe that our audit provides a reasonable basis for our opinion on compliance for each major federal program. However, audit does not provide a legal determination of Regional School Unit number 22's compliance. Once again, it just was not part of the audit. So when we look at our annual audit, it was very specific. It covers off on very specific items. Now, when you look at here, we have a couple of the findings that we found within the audit themselves. And when you look at this, it does talk about a couple of misstatements here, but they were determined by management not to be too big, which that's fine. But it does say here, it's not when you think about, well, why would you get somebody else to come in? Well, management consultation with other independent accountants. In some cases, management may decide to consult with other accountants about auditing and accounting matters, right? So if for some reason the organization decides we'd like to get somebody else in here, maybe look at it a little bit differently, you can always get a second opinion, kind of like you would with a doctor. Very similar. Over here, once again, this is another year, and they have the same verbiage in here. This is pretty standard, if they want to go and get another opinion. So it is not unusual or out of the ordinary for an organization to get more than one opinion when it comes to it. Not that we're checking up on the work that our accountant is doing, but hey, we might want to have somebody else come in, might have a different eye on it, might see some different things, maybe to give us some more information. So when we talk about getting another independent accountant to come in, it's not completely out of the ordinary, and it's actually being talked about here in the audit itself. Now, here's something that's very interesting, because when you think about part of the budget process that we have, we talked about the underspending, and these were recognized right here as you look at how are we saving money on each year during the year, and you'll find this is very common. They get a surplus from getting actually more money from the state. And here, when you talk about the budget basis of expenditures, we saved $674,000 on this current year, on that year, and the program expenditures were varied by 5% of the final budget. So special education by 5.69%, doing part of the financial positive staff turnover, and fewer than expected outside tuition placements. Student staff also ended under 5.52% under. So when you think about the 5% transfer, once again, we have two different line items that were under 5% here, and then it talks about the increase. So those were recognized within the audit themselves. So something that the organization should be aware of. Now, when you go over here the next year, under expend by $508,000, and here we have student staff support, once again 8.2% underspent. And then you also have special education with some under expenditure here, and then transportation and buses and at 7.33%, adult education at a positive variance 8.63%. So once again, over that 5%, and obviously that's a choice that can be made. Should have voter approval, but once it does say in these that you do have an opportunity, if the money isn't spent during the year, those appropriations are no longer in effect. So you can it goes right into your unassigned fund balance. But when you think about how we're building these fund balances, these were recognized within the audits themselves. Here I have these two slides in here because I thought it was pretty interesting, because when you go back and talk about the gate receipts at the last budget, if you look at these two, 2014, 2015, you'll see that when we talk about that field fund, you don't see it in here. So here are official audit documents. You see the Hammond Academy construction project that you'll also see over here. You see the capital reserve fund, 13,995. That one grows over here to 64,000. HA new Bronco construction project is still at 1,500. Qualified school construction bonds project was over here. Field maintenance now shows up over here within this section here at 76,000. Remember at the last budget meeting, if you're there in the gym, they weren't quite sure when this all started, and they weren't quite sure how much was in there. But as of June 30th, 2015, about 76,000. So if you look at the pacing of what's gone in there, we'll probably, I think it was mentioned around 100,000, might have a little bit more. But, one of those things, and we're going to talk about this in a moment, that we may want to, there'll be a reason to have audited. So when we go down to our next slide, let's take a look at what some of the findings have been. So these are from 3 different audits. These are just snippets that we took out. Agency fund cash receipt. So whenever you're dealing with cash, you have to be very careful. And in this one, while recognizing attempt has been made, so that means it's probably happened before. Attempt has been made to deposit receipts more timely. Noted several instances of cash and from 2 of our schools, student activity funds were not turned over to the main office in a manner inclusion of the cash receipt process. This situation may allow activity funds to be misappropriated in amount material to the agency fund financial statements. If you move on over to the next year, you have here during the audit financial statements, did properly recognize the long-term debt and capital asset activity in the government financial statements. We also noted some immaterial misclassifications and inconsistent classifications of revenues and expenditures. We recommend that the unit continue to improve upon its process to ensure its activity is recorded correctly and is recognized accurately and consistently in the unit's financial statement. Great way to make sure this happens is to bring in a subject matter expert, someone who's knowledgeable, independent, that can come take a look at how we're doing this. Once again, an audit of how we're doing things. And not saying that anybody's doing anything, well, we'll just leave that at that. But someone to come in and say, hey, how are we doing? Now we also have payroll. So remember when we were talking about the VZ agreement, we had, or some of us had some questions about payroll, benefits and stipends, etc. Who was getting them, who wasn't, how benefits were being paid. The unit has implemented a quarterly reconciliation to address prior issues and ensure accuracy in amounts paid to its employees. However, reconciliation is not reviewed. We recommend that this reconciliation be reviewed by a knowledgeable, independent individual to strengthen internal control. So here's a recommendation to management, to the board, that we should have someone come in and take a look at how our payroll is done in this reconciliation process. But I don't know, it'd be interesting to see what the results of that were if it ever happened. And once again, you see agency fund cash receipts right here, which I find kind of interesting. This one pops up again. So if you look at this one right here, while we recognize that there was an attempt to do better in a timely manner for inclusion, so very similar to what we have over here, But here you see there's some new stuff. We noted that athletic events ticket sellers not consistently signing the gate receipts. We noted transaction at Weatherby School, which no receipt was issued for, or what the purpose of the funds were, and we recommend that management implement necessary controls over agency funds to ensure that the unit safeguards its cash and applies control procedures consistently across all agencies. Well, another great way to make sure this happens, now that we've had this more than once, is to have a knowledgeable expert come in and actually take a look and then report out on the findings and make sure that we're tight on our internal controls to make sure that everything as it is. And this is to prevent risk not only from the organization, from the employees involved, because if you don't have the proper internal controls, someone that's absolutely doing nothing wrong at all and following the policy of there, what it is, the whole process isn't being followed and there's opportunities and gaps, that could be a risk to everybody, right? And then you go down here for the next year. Oh, agency cash is here again. We noted instances. See, process situation creates a greater risk of misappropriation of loss due to misplacing of funds. So the wording gets a little bit tighter here. Greater risk of misappropriation of loss due to misplacing funds. How do we know if any funds were misappropriated or if there's a loss or misplaced or what have you? Once again, a knowledgeable professional, independent, come in and take a look at it. Compliance with fund balance limitations. So when you saw before, we're underspending by over that 5% on a continual basis, pretty consistently. Here, we're over our fund balance. And so this is our last financial audit that we had, and it talks about how we need to get that down over the next few years. We've talked about this a little bit, but when you think about over 3%, we should be looking to lower the amount that we're asking from our communities, et cetera, because we are over. This is from our auditors. We are over that 3%. All right. So just some of the findings that we've had here. So when you think about it, as we come to an end here, when you think about why an audit, now remember what we talked about at the beginning. So we go back to our first slide here, start it from the beginning. What are audits? Why have them? And what do they measure? Over the past few months, we've talked about a lot of different areas, but specifically in our finances, we've had some opportunities with the VZ contract, stipend benefits. You can see our auditors have pointed out gate receipts. We've had questions about the gate receipts, the field fund. So when you really think about it, why would you have another auditor come in? You'd have them come in and look at some very specific items. If you look at the opinions from our auditors here, you probably have them come in and look at your payroll, right? Is your payroll accurate? Are people getting paid what they're supposed to be paid? Is it all approved? Take a look at your warrants and purchasing process. Is that tight? Is that what it's supposed to be? Looking at your gate receipts and your cash handling. How are we doing there? Also looking at the processes that you have in place for reporting of your financials to your board, so that you might have a possibility of not underspending by so much, because if you know that you're underspending by a couple $100,000 in a certain area, you may be able to address certain needs or be able to designate those monies for something that happens next year. You can spend it now while you have it all paid for next year, and you wouldn't have to put that into the budget next year. But hopefully this gives you a good overview of what audits are, why have them, and what do they measure, and maybe give you a few questions that you might have to ask folks, and that would be a great opportunity for everybody. All right, and speaking of that, appreciate your time, and hope you come in.